All right, I think that I'm live. There I am. All right, so bear with me. I don't think I have anybody on here just yet, and that is because I'm going to pop onto my phone and make sure that I can see if I have comments. I didn't really miss a comment, but I had somebody who came in last week, and I wanted to make sure that I see the comments. So I'm going to go ahead and prop this up over here so I can see if I have any comments come in. There we go. All right. Real estate economics explained. So we're about 40 seconds into the live stream. Again, I'm going to just stay on here maybe for 5 or 10 minutes, and I'm going to just explain some basic economic premises with a real estate bend. And I have office hours on Thursdays. So what I want to do is just kind of expand on some of the questions that I have with the with macroeconomics and um, looking at the real estate market. So the reason why I had to put the people or put my phone on is because when I go into this view, I cannot see the people in there. So today we're going to talk about the long run supply curve. Okay. And what I'm going to call it the LRSC for short. And what we're going to do is we're going to explain it using Airbnb. So when we talk about Airbnb and we talk about long run supply curves in economics, it's a little different than what you normally see. If I scroll down here and I create a basic market, we have a supply curve, we have a demand curve. We went over this a couple of weeks ago. We have price on the left, quantity on the base, and zero at the corner. What this means is that over here, suppliers want to if the price is going to be zero, they want to produce zero quantity. If price is going to be unlimited, they want to produce unlimited quantity. Okay. Now, what happens in something in the economy in the long run is rather than have a supply curve that is upward sloping from left to right, what we have, I'll do it here in this like star color. We have a vertical line. Okay. So this would be the long run supply curve. Come on, supply curve. And a lot of students, they can't understand, like, why would we have a vertical supply curve? And that's kind of what we're going to go through today. So first, I just want to go back to the basics. We're going to do a quick market recap, supply, demand, price, quantity. At this point, let's go green. We have price 1 for quantity 1. And so what we see is that if the supply curve shifts outward, remember we're at 0. So if it shifts out from 0 to S2, what that does, because we have an increase in supply, it puts downward pressure on the demand. Oh, there we go. To this new quantity 2, at a lower price 2. Now, if people are buying more quantity for less price, what does that do to these suppliers? So if the first supply curve, S1, makes up 300 suppliers, and they have a profit margin of 25%. Well, this new price point here, let's say it's made up of 600 suppliers and their profit margin now is 5%. What's that going to do? Because this is an overall profit margin. What that means is that some of these 600 people are going to say, I can get 15% somewhere else. So they are going to exit the market. How does that play into the long run supply curve? Well, if we put the long run supply curve right here, when they exit the market, remember we had 600 over here. Let's say let's say 150 exit. So we have 450 left. Well, if supply increases, which means it goes out from zero and it causes a price drop, and we have 150 people leaving the market, what we're going to do is we're going to now decrease that supply. So we're going to move from supply curve 2 to, we're going to split the difference here to supply curve 3. And what happens is now from this point, we put upward pressure back on the price and we come at price 3 at quantity 3. And what happens in the overall market is these increases and decreases of suppliers cause the long run supply curve, LRSC, to remain vertical. Because eventually, even though the price goes outward, and so in this fake market that we just created, the long run supply curve would probably be somewhere like over here. Long run supply curve. And why is that? Well, because we know that we had 300 Airbnb operators at one time, then we went up to 600, and then we went down to 450. So let me explain Airbnb. We have a supply and demand curve of Airbnbs. I live out close to Tennessee, so let's say it's by the Smoky Mountains. Okay, we have demand, quantity, 0, and price. At this price point, this is the quantity, and this is the price 1 and quantity 1. At price 1, we are getting $2,000 a night for a room. The mortgage on the home is, let's say it's $3,500. So we want to do, let's say the quantity is 10 days. So now we are earning $20,000 to pay for, let's say, I don't have my phone because I'm using it over here. Hold on. I want to get my, I just want to get a number here. All right, I'm not sure if you guys are seeing this. All right, so if we get, I got my calculator up on my computer. 20,000, right? Let's say we got 30% expenditure. 30% is, so we have 6,000 expenses. And we have the 3,500 mortgage. So that's going to be 9,500 total in expenses, which means 11 or 1050, right? In profit. Okay. So why is this important for Airbnb to get into the Smoky Mountains and create the same area? It shifts our supply curve over to this new price point now. Because if this is S1 and this is S and it's 3 new, now we have down the price. So we have a price I'm going to call it, and we have quantity N for new quantity level. So now instead of getting $2,000 a night, we're only getting, because there's 2 other competitors now. So now we're only price per night. And so let me do my math real quick. So that's $8,000, right? 8,000 in income. That our expenses are at least going to be 3,500. And then 30% of 8,000 is 2,400. Is that right? 5,900 in expense on that. That is going to be 2,100 in profit, which is still pretty good, but it's significantly less than the 10,500 that we were seeing earlier. So this is where I'm saying the decreases with increases with increase in supply. This is where I was talking 20 on $8,000 somewhere else. And I'm not going to have to pay 30% fees. What happens if there's a 4th person that comes in here and this amount goes down to $500 a night or $400 a night? What's happening here is the income continues to drop as more suppliers enter. Expenses are for the most part, your mortgage rate should be fixed, but sometimes it's not. And if that's variable, then that can cause a whole nother issue. But in this scenario, we're assuming it is fixed. But at what point where will this income lead to somebody saying, I am one of the 600 in the previous example, or the 150 of the 600, right? I am going to go find another area to earn a higher profit or an easier profit. That's the other thing too, is a lot of times we think about, oh, well, I can earn the same profit here. Well, sometimes it's not necessarily about the same as much as it's about the easiest. Now, I study economics. I understand the economy, and I would not do an Airbnb. I think there's too many variables. It's just not in my nature. There are other people who love doing Airbnbs, and more power to them. They can do a great job at it. There's nothing wrong with them doing it. But when we look at the market today, what's happening? Is the market oversaturated? Meaning, is the 300 that were originally done, are they now 600? And are there people out there who are just being inefficient, which means they have low profit margins to the point where they're saying, I can get profits like this somewhere else. So I'm going to be part of this 150 and I'm going to leave the market. That being said, everything returns back to that long run. And it's because of the mechanism of the market where the suppliers will rush to a market that's profitable, and then they will lower the profit margins for all the other people within that industry. And that is why it is the way it is. Where am I going here? Here we go. All right, very good. So let's see. I think that's all I got tonight. No chats tonight. That's okay. About 16 minutes, just going over the long run supply curve and using Airbnb as an example. Airbnb market is very interesting, especially from an economic point of view. It's a very unique, because it's very easy to jump into Airbnb. You just have to have a property in a particular location. And what we see where I live is a lot of people have Airbnbs and they earn quite a bit of money around graduation time. And I know one lady who she had an Airbnb because she was moving here, but she was renting for a couple months. Around graduation, she actually left Lynchburg, went to a different city for an Airbnb so that the place she was staying in could rent out. There was a lot of opportunity there, and it's not something that I look at. It's just not my style, I guess, is how to say it. But anyway, thanks so much for anybody who's going to watch this in Futureland, as Dion would say. And I look forward to any questions that anybody has while watching this. Thanks so much, everybody.